Hey everyone, it's Nick with Us versus Herd. Today we're going to be going over managing crypto gains on Robinhood. Now, normally I'm trading options and futures or stocks, but I find that there's a lot of people that are trading crypto not realizing how to properly manage risk, when to take profits, when not to take profits. And if you're trading in the stock market, whether it's, like I said, stock, options, futures, or crypto, all the same principles carry over to any situation. So I could take what I've learned in options, apply that to crypto, to stock, to futures, you name it. So that's why I'm making this video. If this video is useful to you, hit the like button. Definitely appreciate it for the YouTube algo. Let me know what you think in the comments. I'm going to be going over some risk management in this video. So let's hop over to Robinhood. Kind of show you what I'm doing now. Robinhood's not my main broker. I do trade some Doge on here just because it's easy to buy and sell on Robinhood for Doge, because you can't even do that on Coinbase. And for if you're trading crypto in the US, Binance and that whole thing, I mean, you get stuck in the verification process, and we don't need to talk about all that right now. You guys trade crypto, you get the struggle. But in Robinhood, they give you access. I am trading Dogecoin right now. I do have, as you can see here, just a little bit over 2,000 coins. Now, these 2,000 coins were entirely free to me because I properly manage risk, which I'm going to go over here. Now, when you're trading crypto, there's going to be highs and lows, as you can see here, like my P&L over the last week. This is my only position right now in Robinhood. It's tanked 14%. However, over the last month, I mean, it's gone. Doge has ripped super high. Went up. My account balance here went from about 1,100 all the way as high as like 2,000 up in here. Crypto ripped up here over 2,000. So the account balance, and essentially my risk was $200, which I'm going to show you here. Now, when I'm looking at this trade here, you're like, how do you have these coins for free? It's because I took my initial investment out. So right now, as you can see here, my average cost for these coins is about 7 cents or so, a little bit over 7.5 cents, 2,000 coins, and my cost basis is $159. But this is what happened, right? So in January, I took $199, $199.49, but roughly $200 in January. So January 28th, as you can see the order here, at 11:31 p.m. Central Time, I bought $200 worth of Doge, which gave me 2,564 coins. Now, when we ripped up on over the last week or so, on April 19th. So I did hold this for a little bit. When you're trading crypto, you just kind of hang on to it, just buy when things are settled down, sell the rips, and kind of relax. And like, why did you sell? Why did you do that? It's because I took the risk off. Like for me, it helps when you're holding trades, like when to get out. People are always like, hey, when should I get out? When should I do this? When should I do that? And if you have zero risk in this trade, you can let it ride for as long as you want, and anything is better than what you had before because you already took your initial capital out. So on April 19th, I sold 514 coins at 38 cents. So my initial order here, January 28th, was a buy. So I bought 2,564 coins at 7 cents for $199.49. Then on April 19th, I sold 514 Dogecoins at 38 cents. So, near the top, wasn't time perfect, but near the top, I took my initial capital that I invested out. And now I am riding these coins right in here. I now have over 2,000 coins. So I have 2,050 coins, which I took my initial capital out. I can let ride. I can let it ride. And things got a little scary over the last, 24, 48 hours for crypto in general, not just Doge, but Bitcoin went under 50K. Things were getting smashed. And Doge actually, if we take a look here, is, it actually, looking here, it came all the way down. I don't know if you see, there was a little bit of a flash crash here. This candle went from 26 down to 11 cents. It was like, the low was, 13 cents, as you can see up in here where it says price. You can see the low was down to 13.39 cents high was 22. So we had a flash crash and then it got bought up, and now we're sitting at 24 cents. There's a little bit of recovery here. Over the last day, we've been cruising on and up, but there was a flash crash here, and a lot of people, why you get those flash crashes is because people are not properly managing risk. They're not saying they're holding too big. They're trying to get rich quick. Like if you're trying to get rich quick, this is not it. I mean, sure, there's been a lot of media attention on people getting rich. There's been a lot of media attention on, big gains. I mean, even this position up 214%. I mean, 300, like total return on this, $341. I mean, right now I have an equity $500. It's not going to change my life, right? But if you're doing this kind of as a side hustle for fun, I mean, it's pretty cool. I went from a $200 investment. So if you add the 200, because I took it out, plus this went from a $200 investment to a $700 investment. It was even higher, a couple of days ago, right before we had this little crash. I mean, this $500 position was worth $1,000 just a day ago, right? When it was hitting like 44, 45 cents. So, I mean, this could really scale. So when you're trading crypto, just like you're trading stocks or options, what you're trying to do now is accumulate stock or interest, or in this case, coins. So like, let's say I'm trying to build a position in Dogecoin. What I probably should have done when we had this flash crash to 11, I should have took my $200 and invested it back in, because I've already would have doubled my money and then some. So I went from 13 to 24, would have doubled my money, and then I could have took my $200 out, right, and kept the extra coins like I did here. My initial $200 bought 2,564 coins. Then my $200 that I sold was only 514 coins. So then I net 2,050. So you can kind of keep doing that. So on the drops, I can reload this $200, lower my risk. Like trading, investing is all about lowering your risk. Like I'm trying to lower my risk and maximize my profit. Lower my risk, maximize my profit. So in this case, on that flash crash, probably could have took my $200, already would have doubled it, and then I could have took my $200 out and kept the coins that was the difference, like I did here, and which was a 2,000 coin difference. So when you're trading, when you're investing, whether it's crypto or options, you're trying to accumulate. If it's something that you want to hold long term, take the risk off. And we're very emotional beings, right? Psychology plays a big piece in investing, plays a big piece, and you get scared if you're holding on too long. You're like, I don't know when to get out. I don't know when to do this. But I noticed if I take my capital, my initial capital out, I took my risk off. And I know $200 is a small position, but this is scalable up. Whether I'm trading $200 or $20,000 is the same situation. Like if I was trading $20,000, which some of my positions when I'm trading options and futures get bigger in size. I mean, it could be 5,000, could be 10,000, could be bigger in size. In this case, it wasn't, but it's scalable. Let's say I had a $20,000 position in Doge, and I wanted to capitalize on that. I could have took my $20,000 out and kept the difference. It's the same thing. Just multiply this. It's the same exact thing. So when you're trading and investing, you're looking for scalability. You're looking for ways to accumulate mass, which that's what we started to do. So now I have these 2,000 coins for free. I can reinvest my $200 or whatever money I want as I see fit. If I want to buy the dips, I'll buy them and I'll keep rinse and repeating. Meanwhile, the number of coins I'll start accumulate will start going up and up and up, and this will be free. This will be free. The more times I do it, if I put my initial capital in, it rips up, take my initial capital out, keep the coin difference, and rinse and repeat. And you can see you could definitely build a sizable position and reduce your risk. And that's what trading is all about. So if you learned something, if you watch this video to the end, comment below, hit the like button, and as always, stay safe, stay green. It's us versus herd.